Does the Trump trade have legs? Is Trump's crypto task force going to advocate building a reserve of Bitcoin, making the largest balance sheet in the world a structural buyer? Is it time to go all in on Bitcoin? In today's update, we will discuss our model's time price trajectory. Is Bitcoin going to reach escape velocity to the moon, or will market makers shoot it down? If you are new to the channel, our daily updates are short format summaries of our market perspectives and trading strategies. We are a team of investment professionals leveraging our careers in traditional finance as traders, market makers, and portfolio managers for top-tier institutions, having transitioned to proprietary traders of digital assets. We have developed a methodology combining qualitative and quantitative factors, merging a multitude of theoretical constructs. Our approach translates how the pricing mechanism is influenced by market maker predatory tactics and trading algorithms, with a focus on market structure, liquidity, volatility, and time-price volume relationships. Please note, our content is not investment advice, or is this an educational channel. It is intended for entertainment purposes only. If you suffer from analysis paralysis and prefer short-format market perspectives and rationale for our trade setups, stay tuned and enjoy. Overnight, Bitcoin traded in a less than 1% range around the 76,000 level, which is currently the session volume-weighted average price, after nearly touching 77,000 late in yesterday's New York session. Continuation to the upside in yesterday's session got a tailwind from record net inflows into Bitcoin ETFs in excess of $1.3 billion. Unsurprisingly, sentiment indicators reflect market optimism, with the crypto greed and fear index remaining deep in the greed zone. Unlike the 6 attempts at new all-time highs since March, this is the first instance to which Bitcoin did not have a failed auction and revert lower with high velocity in the following day's trading session. Is this time different? Examining the drivers of price on the follow from the US election, the implications of the coming Trump presidency are many. Markets have rapidly and broadly repriced US risk assets in a very highly correlated fashion, coined the Trump trade, or the repricing of forward expectations of the impact of Trump's policies of lower taxes, less regulation, a more nationalist protectionist foreign trade stance, and a general departure from left-wing Keynesian economics with less government intervention. Bitcoin's high beta outperformance versus correlated risk assets is attributable to reduced idiosyncratic risks for Bitcoin and digital assets, as Trump has expressed his intention to appoint a crypto task force of industry experts to facilitate innovation and explore potential government efficiencies via blockchain technology, as well as potential benefits of holding Bitcoin on the government balance sheet. Additionally, the FOMC meeting yesterday affirmed looser monetary policy and supportive liquidity conditions. This in a broader backdrop of the upward inflecting global liquidity cycle and global money supply. A repricing of geopolitical risks is also playing in, as Trump has explicitly stated his intentions to seek a rapid diplomatic solution to conflicts in Ukraine and the Middle East, having demonstrated competency in similar efforts during his previous term. Happy days ahead? Or is the optimism getting ahead of itself? Looking to how the market's invisible hand has painted the chart, recent price action is impulsive, and both local and long-term market structure are bullish with invalidation levels, not within close proximity. Momentum is clearly to the upside, and there have yet to be any signs of weakness since the election results. This skews probability to a continuation of trend. All things considered, both qualitative and quantitative, fundamental and technical factors are in congruence. However, as a caveat, precisely such consensus positioning and euphoric market sentiment are also symptomatic of market exuberance, which occur prior to market tops or near-term corrective price action. Looking to liquidity characteristics and incentives of large market participants such as market makers, liquidity providers, and whales. Incentives to take profit and initiate a squeeze to consensus long positing and trigger the fresh accumulation of liquidations to the downside is becoming increasingly enticing for predatory participants. Looking to volatility markets for a more objective measure of market expectations and sentiment, volatility has subsided significantly on the back of the election, pricing in the aforementioned risk reductions and a more normal probability distribution. The call-put skew is also positive for all expiries, indicating both near and long-term expectation of higher prices. This being said, aforementioned strategy implications are to maintain our long bias until signs of weakness indicate a potential transition to corrective price action. Our model's probability-weighted scenarios of the trajectory of price and levels to which are market participant points of interest, to which we expect price to gravitate to and/or eventually become inflection points, are as follows. To the upside, we project current impulsive price wave to peak at 81.5 thousand by January month-end and the cycle top of 145,000 by mid-October 2025. Our model is recalibrated monthly. Thus, current projections reflect pre-Trump victory and associated investment implications, which we are currently evaluating. More locally, there are no upside resistance levels as seasoned liquidity above the previous all-time high has now been sanitized, and Bitcoin is currently in price discovery dictated by the auction process. Looking to beta-adjusted Bitcoin correlation to risk assets, we can extrapolate a Bitcoin beta of 2 to 4, or performance of 200% to 400% that of the Nasdaq index, which currently is indicated by futures markets to open minus 0.25% in today's New York session, which, for example, would equate to a minus 1 to minus 2% correlated move in Bitcoin levels, to the downside to which we will monitor for possible reaction and potentially increase of our long exposure are 74.4, 71.8, and 70.6 thousand. Our invalidation level to continuation to the upside is 67.9 thousand, which would be a break in market structure indicating potential reversal in trend. As long as price remains above this level, probabilities lean to continuation to the upside. We currently view risk-reward on short trade setups as low, thus prefer rather to exercise patience in implementing long setups at aforementioned key levels other than tactical shorts. We reiterate our long-term bias to upside prices, thus are willing to absorb negative mark-to-market impacts during corrective price action, increasing our long exposure into weakness. This also due to our preference to hedge downside risks via out-of-the-money put options, rather than attempting to outright short into a bull market. Note that our strategy is engineered by systematic rules involving low-frequency adjustment to risk, to which we attempt to enhance the long-term return of Bitcoin both on absolute and risk-adjusted basis. We do this through the use of synthetic long and short delta via structures consisting of options and futures, which gives us additional compensation from volatility premia, the ability to hedge downside risks, and amplify convexity in Bitcoin performance projections. As always, do your own research and analysis. Be safe, and good luck in trading.